Hello, this is Johnny and Jeff Ussery with your April market update. Jeff, to get us started, why don't you give us an update on what's going on with the second home market?
I will. This is from the National Realtor magazine, April 12th is when the article is written. In March, demand for vacation homes dropped sharply for the second consecutive month. Despite the sharp drop, second home sales are still up 13% compared to their pre-pandemic levels. Nevertheless, 2 months of consecutive declines is a trend housing analysts are paying attention to.
So it's interesting, there's some negative news out there in the market now. The R word we're beginning to hear. Thankfully, it's been many years since I've heard the R word. Of course, I'm referring to recession. Numerous publications in the last week have been writing about the probability of a recession. Hensler, a well-respected investment newsletter, stated on April 12th, the interest rate yield curve inverted for a brief period. The yield curve tends to invert before a recession. We saw inversions before the recessions of 2000, 1991, and 1981. The yield curve also foreshadowed the beginning of the 2008-2009 recession. An inversion generally indicates a recession is coming. However, it could be within the next 12 months or maybe take up to 2 years. Deutsche Bank stated, quote, "We no longer see the Fed achieving a soft landing. Instead, we anticipate that a more aggressive tightening of monetary policy will push the economy into a recession." They are the first bank to jump on board with that belief that a recession is coming. Jeff, share some good news with us.
The good news is CoreLogic did release their home price index, showing that home prices jumped 20% over the last 12 months. So if you're on the selling side of that, well done. CoreLogic expects prices to continue to increase, but at a much slower pace of 5%.
Inflation, it is at a high, 40-year high, 8%. Interest rates now 5%. With inflation at 8% and with the Fed indicating they're planning 7 more rate increases this year, it will definitely affect the real estate market. Many of our buyers pay cash, so some will say, well, Johnny, the increase in interest rate won't affect our market in Colleton, Belfair, Berkeley, Oldfield, Pembina Bluff, etc. The increase will only affect the lower price starter homes. The impact, however, comes from the psychological aspect. Individuals at all price levels, including our higher net worth individuals, will feel less wealthy with their diminished buying power. And if they feel less wealthy, they'll tend to spend less and postpone purchases like homes. Why don't you share your story we were talking about the other day?
Yeah, so we have a cash buyer wants to buy an investment property on the beach, and he wants to enjoy it a little bit for his family, but also use it as investment. We had a home that he was ready to make an offer on, $3.5 million, and it was March 31st. He did the numbers, said it all makes sense, let's do it. And then April 1st, Friday, he said, Jeff, have you seen the interest rate hike today? And the news of 7 more hike, at a 0.25% increase throughout the year. I said, I did. And he said, well, it doesn't affect me because I'm a cash buyer, but it does affect me as an investment. He said, I'm a little worried that it might hurt the economy some. And for that reason, I'm going to take a step back. And, here we are 2 weeks later. Still, he has not made an offer yet.
We're still waiting for him to call.
Yeah, we're ready. Yeah.
So what does all this mean for us locally? I do feel prices on homes are going to, in our market, are going to continue to increase, although at a much slower pace. And there are some, and that's assuming that our supply is limited, okay? We don't have a lot of homes that come on the market suddenly. However, I do have some concerns. We're now seeing some price decreases in the MLS, the multiple listing service. It used to be homes were increasing. Now we see some homes lower their prices. Another thing, it's taking longer to sell some homes now. In addition, we're getting many fewer multiple offer homes, own homes. So bottom line is, it is still a great time to be selling. Prices are still at an all-time high in our lifetime. However, there are some things out there that indicate now is the time to sell if you're considering selling in the near term. If you're waiting to sell 5-10 years from now, who knows, all bets are off. But if you're thinking of selling in the next 6 months to a year, I'd go ahead now and get ahead of everybody else. And call us, let us know how we can be of help. We'll be happy to come by and take a look at your home and give you a market valuation. Again, this is Johnny and Jeff Ussery. You can reach us at 843-757-7712. Thanks so much.